Welcome traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and welcome to a daily analytical report with Alpari. Today we have a nice movement on British pound. I would like to tell you a little bit more about the fundamental side of this movement, but I'm sorry because this movement was done without any news whatsoever, right? That was an order-driven movement. Most probably stop-loss orders were triggered. There was a large package of orders on British pound. That is why we do have a significant upswing. We do have a significant appreciation of British pound against all major currencies. Also, we do have a very positive sentiment on global stocks. Asian stocks, for example, are on 18 months highs. Also, for example, my local stock exchange, Warsaw Stock Exchange, is advancing higher about 1.7%, which is a very good score. And in November, December, January are very successful in this matter. Obviously, also S&P 500 is advancing higher, also DAX. Interesting thing is that despite the fact that stocks are advancing higher, gold and silver, so precious metals, are also trading higher. So it's not a complete risk on mode on the market. When there's a risk on mode, traders are buying shares, are buying stocks, and are usually dumping safe haven assets. But this time, stocks are advancing higher, but also gold and silver. So this is kind of an interesting situation on the market right now. Another good story to tell you is oil, because yesterday we had another data for the oil market. Look at that, we had EIA crude oil stocks change. And the number we got was 13.8 millions. This is quite a big number, actually. If you see on the historical chart of that data, this is a very big number, but and it should cause the oil to decline. But oil did not go down. Why the oil went higher is probably the fact that this data was the same as API crude oil stock change, which was shown a day before, 18 hours before. So those numbers are more or less the same, and we already had a reaction for the API. And some may say that this was already discounted by the market. And also many people are, still some of the people, they do believe that this OPEC agreement will work, which in my opinion is not the right thing how we should look at the oil market right now. Let me show you the calendar and the most important news today. What we had trade balance from Germany. Exports dropped significantly. Exports dropped more than expected, and everybody knows that Germany is a top exporting country, so it's actually a very bad news. Euro dollar is declining. And probably because of this data, they failed to break the neckline of inverted head and shoulder formation, which I will show you in a second. But still to come, what do we have as initial jobless claims, as always on Thursday. We also have data from the job market in Canada, and we do have Bank of England Governor, Mr. Mark Carney, speaking in 6.5 hours. Overnight, what we'll have is RBI monetary policy statement from Australia. Also trade balance from China, so important news for traders. And tomorrow a pack of data from Great Britain and data from the job market from Canada. Don't forget about Stanley Fischer's speech on Saturday, which I was telling you about yesterday. So we can now look at the charts. Maybe let's start with this oil that I told you a little bit at the beginning of the webinar. You can see that this reaction on this API data on EIA data is here. So this is the reaction after API. The price declined sharply. After that, we got this worse for oil data than expected, and actually the price of the oil went higher. So some of you may be surprised by this fact, but I think it's kind of a buy the rumors, sell the facts kind of action. So after a very weak API, many people were expecting this to happen with EIA numbers. So that's why we had this reaction like that. Let's see how much of this movement did we retrace. And as you can see, the recent upswing allowed to retrace 50% FIBO of the recent downswing. And this seems like a legitimate resistance. So if you're bearish on oil, that looks like a good idea, a good place to open short positions, especially with this shooting star on hourly chart bouncing from the 50% Fibonacci level. And as you can see, we have after that we have reaction. So traders do follow this signal. I also said that we are in a very good moods, not only on British pound but also on DAX. On DAX, we broke the upper line of the wedge. We also went above this horizontal support. But what we are still missing is a breakout of this trend line again. But anyway, the sentiment seems positive, even if I draw the upper line of the wedge like that. We got a breakout. What I would wait is for one of the principles of the price action trading. So after the breakout, when the next candlestick is making higher highs and higher lows, it means that the breakout is legitimate. So far, the next candlestick after the breakout is not making higher high. So I would wait with too big optimism on this pair. But as when the price will be able to make higher highs here, that will open a possibility to go long. S&P 500 also broke this line, connecting recent lower highs, and now they are trying to break the horizontal resistance here. Maybe red color will be suitable for the resistance, but as long as they didn't, they should close the next candle stick above here, right? So still, sentiment is obviously positive. We are near all-time highs. Everybody is, well, most of the people are buying because the price is going higher. But from the technical point of view, this still can work out as a false breakout. So I would be extra cautious and wait for the next candlestick to close above this resistance. And this way, in my opinion, from the price action point of view, the buy signal would be created. Not sooner. And oil drops steadily. So we can come back to currencies. And on currency, euro dollar first. Why is that? Let me remind you the situation from a few days ago where we had this shooting star candlestick on a daily chart here, bouncing from a horizontal resistance, which in smaller time frames created a head and shoulder formation here, and the price broke also the neckline, the horizontal support, and the trend line here. But then the price created inverted head and shoulder formation, right? This left shoulder, head, right shoulder. I think I can delete those now, as you can see that. And the price failed today to break the neckline. But in the same time, not like that, but like that, what we do have here is a flag. Okay, this is a flag, which is a trend correction pattern. Flag ends with inverted head and shoulder formation, so there are high chances that we will start another upswing, especially that we bounced exactly from 38.2 Fibonacci level, Fibonacci retracement of this upswing. What I'm missing here is a breakout here. If we got a breakout here, that would be a strong buy signal, but it's not lost yet, because if the price would go here, another color, too many colors on the chart, but if the price would get here, that still would be an inverted head and shoulder formation, right? That still would be a legitimate right shoulder. Even here and here, that would be a legitimate inverted head and shoulder formation. So what I'm trying to tell you is that when the price will be able to get here, that will be a very strong buy signal. Why? Because that will be a start of a new upswing, and not upswing for 100 pips, but much bigger. Because that, if the price would get here, that would mean that this correction for over 180 pips is over, and we can come back to this uptrend, uptrend which was for 500 pips. So once the price will get there, first potential target is 120 pips, and for example, good place for stop loss is somewhere here, 40-50 pips. So it gives you 3-to-1, 2-to-1 ratio position, which is always good to see this kind of trade, right? So that's the situation on euro dollar. We may get a nice strong buy signal here on this instrument, but in the same time we have to watch for a possible breakout of this support created by connecting bottom of the head and bottom of the right shoulder, and it can go both ways. Once the price will be able to break below 38.2 Fibonacci level, that will be a strong sell signal. Australian dollar to American dollar I covered on a Trading Sniper as well. You for sure remember those corrections equality movements. I'm telling about that almost on every meeting. And price, what the price created is a pennant right now. So we are not exceeding lows from 2 days before, highs from 2 days before, so we are creating actually inside bars, and we are waiting for a breakout here. The breakout is near as the price tested, for example, the resistance created by connecting recent lower highs. Price tested that today, but bounced from it. Price tested today as well the horizontal support and bounced from those horizontal supports. So as you can see, the daily change decreases on Australian dollar to American dollar, and we're just waiting for a breakout here, which looks highly well. breakout will happen, right? That's the thing with the breakouts from the side trends. They do happen. But the thing is, if they will be sustainable, or they will be false breakouts, or they will start a new nice movement, but they will happen anyway. It's the thing that if you like to benefit from them or not. British pound to American dollar, you see this upswing, which happened without any news whatsoever, but our scenario, which we highlighted, which we marked yesterday, is happening. So what do we have here is this hammer candlestick on a daily chart with a long tail bouncing from this resistance, bouncing from the horizontal support, creating a false breakout here, and now the price declined a little bit yesterday, but at the end of the day they managed to close to make a bullish candle. Now they are making a bullish candle as well, and it looks like this movement will be continued. That's the funny thing that I was trying to tell you. Silver and gold are advancing higher despite stocks going higher as well. That's an interesting situation on precious metals. On hourly chart, we can see that yesterday silver made new midterm, well, actually long-term high. Today is a side trend. Maybe we will experience a correction here. Also on gold, on the hourly chart, as you can see, we made yesterday we made a new high. Is this a good place to stop? Well, yes, it is. It's slightly below 50% Fibonacci level, but if we will look at those lows here, it's exactly on the spot, right? So those lows were here. Those lows were 1245 and 38, and we got a high on 45. So we actually touched that resistance. So it's nothing strange that we can see some take profit, that we can see a take profit action here, right? We have good horizontal support here, for example. Support usually should be green. So it's nothing unusual that we're bouncing from the support. As long as we are above the trend line, the midterm trend line, here the sentiment is positive. Another trend line is this red one. As long as we stay above those two lines and this horizontal support, the sentiment still is positive on gold, and most probably it will be used by buyers to buy more gold, and eventually break the 50% Fibonacci level and break this psychological barrier on $1,250 per ounce. American dollar to Swiss franc here. You know that our base scenario is bullish here, because we believe that that was a false breakout, and we believe that this support will be held after the false breakout. Also, this breakout of this midterm downtrend line is legitimate and starts new upswing. Actually, this is a flag. Look at that. This is a flag in an upswing on a daily chart, right? Flag is a trend continuation pattern, so we should see the trend being continued and movement at least to 38.2 Fibonacci level. Right, we should expect movement at least here. On the other hand, as you can see, here and here, maybe this low will be better, like that. This can be considered as a flag in the downtrend. But in our opinion, the more probable scenario is the price getting to the green resistance here. So still 50 pips higher, which for American dollar to Swiss franc is very high value. And obviously, as you can see, we are just below the parity. Show all American dollar to Swiss franc here. We're just below the parity, 0.99954 pips to the parity on American dollar to Swiss franc, which, as you can see, for the last few days was resistance. Next instrument is American dollar to Japanese yen. Japanese yen should be weaker when we see an upswing on stocks, but actually from the beginning of the year, Japanese yen is stronger. Is stronger, but we can see some signs of possible reversal, especially on Canadian dollar to Japanese yen, which I will show you in a second. But first, let me finish with the American dollar to Japanese yen, where we are defending this 38.2 Fibonacci level. But well, this pair is popular. Obviously, many traders look at this pair. For me, from the technical point of view, it does not look like a strong trading setup. If I had to trade here, I would go long because of the defense of 38.2 Fibonacci level, which, you know, I always believe is a very strong support. And also we do have a kind of double bottom formation, but I don't look at the double bottoms, but I do know that many traders, they do that. What else do I see here is a wedge formation. Wedge is a trend continuation pattern. Trend is positive. So when there is a wedge present and the uptrend, I think that this uptrend should be continued. So in overall, it gives me a small bullish sentiment, but not big enough to open a long position. American dollar to Canadian dollar, it's a kind of a side trend for the last few days. With this decline here, the chances that we'll try to break 23.6 Fibonacci level, they rises again. Here we have a resistance. As long as the price stays below this resistance and this support, the sentiment here is it's a side trend. The sentiment is neutral. Canadian dollar to Japanese yen. Here I can see a positive situation. Let me explain you one more time what do I see here. So the price stopped below a horizontal, long-term horizontal resistance here, which was a support already back in 2015, right? So the price stopped here. The price did not create a reversal pattern, but instead of that, the price created a trend continuation pattern, which is a wedge, marked here with with black lines. Also, we do have a horizontal support here on 84.9.8. We bounce from this support again. First, we did that at the beginning of December, then we did that at the end of January, and now we're doing that in the beginning of February. If we go to the lower time frames, what do we see here is a triple bottom formation. First, second, third, with a breakout of a neckline. So the signal from the triple bottom formation is already active here. The closest midterm resistance is here, and to this resistance we do have 65 pips. So in my opinion, we do have at least potential for 65 pips, but in the long term, I think we should get even higher, 150 pips higher to the upper line of the wedge. Price failed to test the lower line of the wedge because the price was stopped higher. The price was stopped on a horizontal support. So as you can see, the buyers demand is stronger than supply, because they stop the downswing aiming the lower line of the wedge. If the demand is stronger, it would be wise to stick with them and join them. Entering here gives you risk of 100 pips, but gives you potential of 200 pips, if not 300, right? So you get a decent risk to reward ratio on this transaction because it's a 2 to 1, 3 to 1. Right, in my opinion, it's an interesting setup. I like it. It looks much better than, for example, American dollar to Japanese yen. On Canadian dollar to Japanese yen, I'm more in favor of Canadian dollar, which actually, when we compare Canadian dollar to Japanese yen and American dollar to Japanese yen, and I'm more long on Canadian dollar than American dollar, it brings me to a short position here on American dollar to Canadian dollar, because from those two I think that Canadian dollar will be stronger. So American dollar against Canadian dollar, I think that from this correlation I should see a downswing here. I should see a Canadian dollar being stronger against the American dollar, which actually that was my view in the last week. It didn't work out, but maybe this time it will. We can see that we have the same instruments from the beginning of the week. Maybe let me show you something new. Euro to British pound. Let's see how this upswing without any news whatsoever, how it affected Euro to British pound, where this support, obviously this resistance, head and shoulder formation, left shoulder, head, right shoulder. We do have a horizontal support here as well. On smaller time frames, we also do have this horizontal support here, and it didn't change the situation much. It just increased the chances for a bearish breakout here, but this situation unfortunately it stays the same since the end of January, since the 23rd of January, because we are just having a side trend between 170 70 pips. Also can highlight this support like that. So even the spike from the morning didn't change the situation on euro to British pound much. Let's see New Zealand dollar to American dollar. What's the situation here? When I analyze, I always start from the daily chart to estimate what the trend is in the long term. What I'm seeing here is a false breakout here, which bounced the horizontal resistance here. Okay, so what I'm seeing is a short position on New Zealand dollar to American dollar. If we will assume that New Zealand dollar to American dollar is correlated with Australian dollar to American dollar, we should see a downswing here as well, but Australian dollar is much stronger than New Zealand dollar, which you will be able to see on Australian dollar to New Zealand dollar chart, where Australian dollar skyrocketed 170 pips lately and is on the highest levels since the end of November. So Australian dollar is much stronger than New Zealand dollar. Is this a good trading opportunity? Well, it's not the nicest technical setup that I'm seeing. Also, we do have a horizontal resistance here. We do have a horizontal support here. There is still some place for improvement here, 150 pips to the closest resistance. So the strength of Australian dollar to New Zealand dollar should be continued in the midterm. Coming back to New Zealand dollar to American dollar, yes, I do see a short position here. Let me also check the Fibonacci level, at least 25 pips. So it's rather an opportunity for the short-term traders. The next support is 50%, which has 80 pips. But because of the fact that we're close to 38.2 Fibonacci level, I wouldn't be so eager to open short positions here. Okay, let me wrap the situation up. And here on the euro dollar, we are stuck in a side trend and we are waiting for a breakout, possibly a very strong buy signal here. Australian dollar to American dollar also, we are stuck in the last 4 days in a pennant and we are waiting for a breakout. British pound to American dollar, there is a bias and there is a positive sentiment here. Silver and gold in the long term, positive sentiment, but in the short term, a possibility of a correction. American dollar to Swiss franc, there is a buy sentiment, a long positive sentiment here. Also here, American dollar to Japanese yen, American dollar to Canadian dollar. I'm more in favor of short positions here. Canadian dollar to Japanese yen. Here is a long position. Australian dollar, New Zealand dollar. That is a positive sentiment. New Zealand dollar to American dollar. That is a negative sentiment. Euro to British pound. Negative, but in the midterm, it's still a side trend. And indexes, long positions and oil, that is a kind of a side trend. Okay guys, thank you very much for watching our daily analytical report. Remember, and now we're having a short break, but after that a webinar about technical analysis where I will explain you the details of this type of analysis, which I often use, well, all the time, which I constantly use for opening positions. But now a short break. Remember to follow us on Twitter and our website alpari.news.